Okay, we're going to kick off the next panel, and really excited that we're going to talk about partnerships. We talked a lot about FBO before, and now we're going to introduce some of the card side of the business and how you do partnerships on the card side. So we're going to have Ken back from US Bank, Rafael from Visa, Ashley from Finex, and really excited to have Stephen Velasquez, Head of Partnerships for ELAVON, kick off and moderate the panel. Thank you.
Thank you, Peter. Appreciate it. So I'll get up for one sec and just, we're excited to be here. Thank you, Peter, for the invite. And most importantly, this is a fun moment for all of us here at ELAVON as part of US Bank, right? We've heard for years, drive one bank initiative, right? We are one bank, and we truly are becoming one bank. And exciting because we're at the ELAVON dorm. So I know you guys have heard headquarters right around the corner, but literally I call this hotel the ELAVON dorm. So welcome to you all. For anybody that comes in town, you go to training for a couple weeks when you start. You always start at the dorm, and you guys are all staying here. So we're super excited to be here. And to add a little bit more color to why we are evolving into one bank, into US Bank / ELAVON. What's important is on all of our regional shows, some of our Transact, which is a large payment show, we've always gone out as ELAVON branded, right? US Bank on the bottom. Now, we're US Bank ELAVON. And I can't tell you the amount of times in the last year, and thanks to Corey and our marketing team and those folks that have helped represent the brand from the US Bank brand, but people come up and say, hey, congrats on the acquisition. Well, thank you. It was 20 years ago, but thank you. I wasn't here, but thank you. Appreciate it. Still getting out of college. But with that being said, I mean, that's what we're really driving towards. And so we're excited to be here. And let me take a moment to introduce our panelists with a little bit more detail. So let's start with Ms. Ashley Eisenberg, one of the founding folks in payment facilitation. So payment facilitators is where a lot of the financial technology market is driving towards. We here at ELAVON have a partner journey. We're going to go into some details there. But Ashley from Finex, I mean, this is a group and a technology stack that we have partnered with, we believe in, and we are so excited to have Ashley here, but then also to have Finex be part of what we are driving towards from a payment facilitator standpoint. We also have Ken, and I think you all know Ken by now, part of our embedded banking group, and has been a huge resource already, just from the relationships we've built with our partners, also internally. So thanks, Ken, for being here. As well as we have Mr. Rafael Rossi. And so Rafael runs payment facilitation for Visa across North America. And the rules across the card brand landscape have changed, and looking forward to hearing from Rafael and him sharing with all of you, right? It was very kind of strict requirements around this partner type, and Rafael's been a huge part of driving this initiative across Visa, and that's where a ton of the market growth is growing across the card landscape. So with that, to introduce myself, so Stephen Velasquez, run partner business development across North America. One of the things we're super proud of here at ELAVON is that every one of our partnership agreements is US and Canada. And so, when we compete against some of our competitors, everything is so regionalized, right? It's US, Canada, Europe, regardless of what region you process in, the card brands, thanks Rafael, different rules, different landscape, but you have to, right? Because there's different laws in various regions. So with that being said, here at ELAVON, we are ELAVON North America, Rafael, Visa, North America. So some good partnerships have grown because we can get you to both US and Canada. So with that being said, we'll click into a couple slides here. So you guys have obviously heard huge global reach at ELAVON. So Europe, Canada, US. US drives a significant amount of our volume, but we are growing in Canada, we are growing in Europe, and we have partnership types that we are looking forward to speaking with you guys about here in this show. If you just take a moment and think about, many of our competitors are US only. Canada only, Europe only. Look at our landscape here. We have, 371 billion plus in North American volume. We have, authorization abilities in 131 currencies. We are so fortunate to be partnered with the bank, because one of the things that we have here at the bank is through payments, we can get you a payment faster into a merchant's bank account, into a business bank account, faster than anybody. So we have funding types that are phenomenal. So there's a awesome resource in this red shirt right here. Her name's Sarah Chakosky, and she runs all of our funding solutions for the bank. And with that being said, please find Sarah, because with that being said, we literally can get you funding to a bank account within 4 hours, not to a card, to a bank account to be able to be used within 4 hours of a transaction being processed, and that's just huge. So we'll get into more of the content, but what I want to talk about is we've set up a whole partner journey here. We want our financial technology partners, many of you here in this room, to know we want you to grow, right? So we start with a referral program where you might have awesome technology, an install base, and you don't want to worry about payments quite yet as far as the sales, the servicing, all of that combined. We start with a referral program. We go into what's called an ISO program. Independent Sales Organization is what an ISO stands for. But basically, you have to register with a card brand so you can represent yourself under your own brand and go and represent yourself under that brand. We take care of a lot of the servicing needs, but at the end of the day, you guys do the sales in an ISO world. So that's where a lot of the market from my business line has grown, but now we're getting to payment facilitation, which is we are sitting there behind your brand now, right? We are processing, and hate to say it for those ELAVON folks in the room, clicks and ticks, right? It's your technology, it's your brand that's forward, and as a payment facilitator, you guys have the controls from a technology standpoint to maybe solve for some of the gaps that we may have in our set, and you guys can grow into. So we're gonna talk a lot about payment facilitation today, hence why Phoenix is here, Ashley representing, Raphael's here. But at the end of the day, from a partner journey perspective, one of the things that I'd like for you guys to walk away from is we want you to grow. We want to take you from a referral program into an ISO program, into a payment facilitation program. A lot of our competitors, what they do is they kind of stunt your growth. We want you to grow. We want to grow with you. And so with that being said, we'll start with a couple questions for the panelists here. So Ken, from a digital transformation perspective, and not necessarily just about payment facilitators, talk to us a little bit about what the bank has done and how the payments landscape has changed over the years.
Sure. So we touched on this earlier in some of the earlier, conversations, but I guess what I'd say is this is one of the sessions I'm most excited about, right? When you think about payments, we talked about a lot of different kinds of currencies and how everything gets transacted through a company. As I think about this, like PayFac's a really big part of the model, and getting to hear these panelists, getting to hear how they're going to process payments, understanding how they can give you some controls as a company in what you're doing. It's really exciting to me to see this change in the landscape. And I think it goes back to some of our earlier conversations. We talked about all the different payment types, right? There's all these gray areas in the market. There's all these new areas that are emerging. And so seeing our bank be a leader and hearing some of these panelists, I think you'll get a lot of really good intel on what's happening in the marketplace today.
Awesome. Thank you, Ken. And with that being said, so Ashley, I mean, you started as an ISO, sold your company, came into the payment facilitation world. And can you talk to us a little bit about why financial technology companies, why technology companies that are SaaS-based really want to grow into that space in particular?
Yeah, absolutely. So we talk to companies of all sizes today. So whether they're startups or whether they're publicly traded companies, they're looking at ways to improve their customer journey. So it really comes down to a couple of key things. Most people are looking at payment facilitation because either the attachment rates for payments are low, right? So that customer journey is very disjointed. Maybe they're on a traditional referral model and they don't have any control over that user experience today. Another one is, they want to focus on customer churn. How do you keep your customers happy and control all of their customer life cycle. And then most of all, they're really coming to us because they want to increase revenue. And that's one of the top reasons we hear all the time is payments for us today is a cost center, but it's a necessary means for our merchants to do business. And so how do we monetize this and make money off of it while we're providing a better experience for our customers?
No, Ashley, I appreciate that. And question for later, but let's just hit into it now, right? Revenue-wise, right? Why, from a financial technology perspective, with these SaaS-based companies, with the coolest technology out there from a software standpoint, revenue, can you double-click on that for a second and just talk to us about what that means?
Yeah, so a lot of the transition is happening around how does a payments platform or a platform, a SaaS platform, vertically focus? So let's say you've got a company that's an event management, right? And today they offer a referral model. So when you go and sign up for their platform as a merchant, you're signing up and then it says, okay, pick a payments provider. And when that disjoint happens, the pricing is now happening with the payments provider that you're signing up with. What this is allowing some of these platforms to do is bring that in-house, and they can price their product accordingly. So they can price their product around how much are we going to charge you for payments and what are we going to charge you for the software. So now they're also making whatever that margin is. Sometimes it's 50, 60, we've seen all the way up to 100 basis points of margin for the platform, where historically they were maybe taking 10 basis points of referral points from that referral partnership. So they had no control and they were making very small margins.
And so when it's time to punch that clock and say, we're exit, there's some top-line revenue there that they may not have been able to capture without the whole get into payment facilitator, own the payment experience as well.
And that's what the direct-to-payment facilitator model does, right? You have managed payment fax solutions out there that allow you to start to capture more of the revenue. If you're looking at overall top line, the direct integration will definitely help with that.
Yeah, appreciate that. So, Rafael, talk to us a little bit about just, the market from a card brand perspective. And I know it's tough to share statistics. I get it. But, we know payment facilitation is where so much of that card volume growth is happening. So can you talk to us a little bit about why that's exciting for the card brand?
Yeah, when we think about how we make payments more digital, right? I mean, there's two ways, or you issue more credentials or you expand your acceptance footprint. And if you think, today it's normal. You see someone selling ice cream into the street with a mobile phone, accepting payments, whatever type of methods they feel like. So the payfax, they have been an important instrument.
Yep. Sorry.
Oh, I'm sorry. I'm sorry.
Thank you.
I tend to talk a little loud.
Hey, you're from Miami. That's what
I'm
happened.
from Miami. So the way that the payment has evolved in the recent years, I think the PayFac, they were a very important instrument on that because they changed the way to do business. They changed the way to introduce the technology. If we think about the past, renting terminals, negotiating terms, the way that you also communicate with that small particular merchant, it was different. And the PayFacs, they found a way to really pass their message in a much more simple way. And also they started to integrate payments. When you look what's happening across the globe, the PayFac business, they started differently. Some markets was really to enable the unbanked population, to bring financial inclusion. There are other markets where you see software companies including payment acceptance to expand their value proposition. And the numbers, I'm going to show some stats. Around the globe, we have around 2,500 PayFacs registered because all of the acquirers, they need to register the PayFacs with us. And when we compare with 2016, it's around 8x growth. So it's a very high growth segment. And one thing that's important to mention is that we tend to think about the PayFac to serve the SMBs. And we're having this discussion, and probably Ashley's going to make some comments around that as well, is that not necessarily, because at the end of the day, what we want to make payments much more digital, to enter new segments, new verticals. And we have been seeing payment facilitators starting to offer different value propositions, specific verticals, like education, tax payments, rentals. And why that? It's not because acceptance. They are embedding this into a much broader value proposition. So you're not buying acceptance, you're buying a solution. And this is where the market is. It's kind of going.
So can you talk a little bit about, and I'll sit next to you in a second, but the 8X growth? Can you just go into a little bit of that? Like, so 2016, 8X growth?
Yeah. I mean, this is across the globe, right? I mean, we've been seeing markets that used to work with just a small number of acquirers, so your value proposition, it's very limited. So the PayFacs, they really came to find that spots where the merchants were not being served. And in a lot of developing markets, new fintechs, I mean, the fintech that we've seen on the banking space, I mean, they all happen also on the acceptance space. And actually, they're kind of emerging. You're seeing ISVs becoming PayFacs, PayFacs issuing cards, sometimes becoming digital banks. So at the end it's not one single solution, it's the whole value proposition, because at the end of the day, increase the revenue, brings stickiness to that particular solution. So that's one of the reasons of the 8X. And also, when you think about how much cash we still have on the markets, they're huge. I mean, of course, again, markets are different, but this is it's a global growth.
Yeah. It's interesting that you say, 8X growth, because the way I explain payment facilitator, or anything that's really going on in payments, right? Yeah. You look at a financial institution business line, you look at, a business line, just ISOs. Guess what? That 8-lane freeway is going like this, right? And we're all going kind of towards the same direction, trying to capture that card volume, because that's what we're all here to do, is capture just a little bit more than we did yesterday.
Exactly. Yeah. And I think just to complement what you're saying, I mean, the whole partnership concept is, it comes to complement a solution. Right. And I loved when you said that you want to work with PayFacs, and you said not necessarily it's true, because again, sometimes you need to recognize it's difficult to penetrate, and those companies, they really complement and really help to expand the business.
Awesome. So Ken, from our perspective, I know we've talked a lot about digital transformation, a lot of the great things Peter has done for the bank. I mean, you look at any press release, and our consumers are loving from a mobile banking perspective and just what we're doing from a digital side. Can you talk to us a little bit about how payments is now married into that digital transformation?
Yeah, I think we touched on it a little bit, but I would say, we see even some of the tools we have now available as a bank, embedding those into our client's platform, and then embedding those into our payment channels. So think about how we settle as a bank, leveraging real-time payments. That just speeds up funding, and we talked about that a little bit. Someone asked the question, I think earlier, why not every bank does it? And so you see those different banks and those different journeys. I even think from a risk compliance standpoint, from all of those different incoming channels, you mentioned 8-lane highway going down to a few. I see that as something where we continue to streamline our onboarding processes. We continue to streamline what we gather, and our groups within the bank and within just the market in general are starting to understand how to kind of aggregate KYCs, OFAC checks, all of those things, so that we're safe and secure in the marketplace, but we're not creating a lot of friction on our clients and platform. So again, we continue to see that evolve. And then again, all those newer payment channels like real-time payments, Zelle, they just complement the other side of the equation.
Appreciate that. So Ashley, from your perspective, just by being in payment facilitation as long as you have, right, coming from the ISO world, right, I mean, you guys have all seen the astronomical numbers that have come from some of the exits that have occurred in the past 5 years. With that being said, can you talk about maybe a couple models with actual names of firms, or you can be general about it, but what is a payment facilitator from that perspective?
Yeah, so I mean, a payment facilitator is really a master merchant, right? In this most simplest form, if you want to drum it down, if you are working in an ISO, traditional ISO, which many folks in here might be more familiar with that model, you are working with a processor to light up a MID for each one of your customers and pulling them through that experience. As a payment facilitator, you're essentially getting a master MID. And within that, you are building your own risk and compliance functions around the appetite of your business. So you can get a little bit more narrowly focused, and it allows for that kind of immediate onboarding. It allows for more control over the underwriting. For example, one payment facilitator might require doing credit checks, where another might say, hey, doing a credit check on an SMB in this market, in the restaurant industry, isn't a true tell of the business because we just came out of a global pandemic. And so you have some more control in that model. So essentially that payment facilitator is allowing you to be the master merchant for many merchants and really embed that user experience. So for a customer, when they're signing up, if they're signing up for your product, they're getting your invoicing tools or they're getting your time management tools. And that's allowing them to, at the same time, sign up for a merchant account where traditionally, right, in some cases, that was like a week-long process. I know when I got started in the industry, I thought it was like super innovative when I went to the WorldPay conference and said, hey, I helped somebody sign up on a DocuSign, and they were able to sign the application in the store and walk out, and the salesman had a signature on the contract, and everyone was like, oh, that's super cool, and it got sent over right away, and the MID only took 3 days to get lit up. So payment facilitators really working towards all of this automation. A lot of what we talked about is, in selecting your bank partners and kind of to grow, payment facilitation is almost the entryway into opening up additional financial services as well. It's really about money movement, how can you settle faster, what other financial services are issuing, but it's a framework to start to build that compliance engine so that you can embed those payments. So you want me to talk about a few people? Are you talking about a few clients who have done this very well?
Not necessarily clients, maybe people that have been purchased for pretty big numbers. I mean, you could, just something to be able to, for the audience, for folks to understand what might be a payment facilitator, what might not be. I mean, there's a pretty large one out there that might be a shape.
There's a few of them, right? I would urge everyone, if you like to nerd out in an S1, I would definitely take a look at Toast's S1 and see how critical this model was for Toast Business. They essentially walked away or stopped charging for their platform and made payments the main vehicle for monetizing their solution and reduced that friction in the customer experience. I know there's a competitor of ours that just sold to FIS for a significant amount of money, I think a little shy of $1 billion. So there's definitely some significant exits and IPOs happening in the space.
For sure. No, I appreciate that, and thank you. That was dance around it. Well done. But with that being said, so Rafael, right? I mean, from the perspective of where's the card volume growth going, right? Why this model works? Can you talk about just the onboarding experience? And traditionally, it has had some friction, right? That's what we're working here at the bank, is having digital help us reduce the friction from not only a banking institution, but also from a partner perspective.
Yeah, the onboarding of the merchant.
Onboarding of the merchant,
with the PayFac. Yeah, definitely. I mean, I think they said, okay, how things are working today, if we need to reimagine how it should be, like I said, avoid the 3 days. And believe me, I saw 3 weeks for a merchant to be onboarded. I said, okay, so it's very difficult to really start accepting card payments if it takes. It should be as easy as going to a convenience store. In fact, we've been seeing payment facilitators selling their dongles in convenience store. I don't know, more than 20,000 convenience stores in a market. You can enter, buy the dongle, download the app. You do the registration. Everything it's automated on the back. I mean, and their risk appetite it's kind of a different. Sometimes they set a certain limited amount before really releasing you to do business as it should. But they introduced this new way to do the merchant onboarding. Again, it's all based on technology. And it's not only limited to PayFacs as well. I mean, we've been seeing a lot of acquired partners moving into that direction. I think each partner is learning from the other side. But again, at the end of the day, it benefits the whole industry. You have a merchant much more satisfied with the service, much more options for them to shop around. And for the acquired partners, again, it's a way to complement their business. It's a way to take their business into a different level. We've been seeing partners really focusing on working with third-party agents to expand their volumes.
I appreciate that. And the other thing, Rafael, which I think you touched on pandemic a little bit.
Oh, yeah.
Right? I mean, we are becoming a cashless society faster as every day goes on, right? The old Justin Trudeau comment, right? Payments never as fast as you know, it will be, everybody's heard the quote. With that being said, can you talk about pandemic, just card usage and what's that done?
Oh yeah, it shifted. I mean, it was impressive. We've been seeing several players that were not that prepared, but they had to prepare themselves in a matter of weeks. Really shifting, complementing. If you think about the acceptance side, for example, PayFax super heavy on card present world. Stores were closed. What I'm gonna do? So we started shifting to payment links, contactless, connections with e-commerce store builders. This is the front, but there's also the back, how you make payments secure. So then started tokenization, authentication, how you're gonna prevent fraud. So it was a huge shift, but at the end of the day, now that things are open, it's a better service for the consumer. So that's why there's no discussion around anymore. It's a card present, card not present. Is you need to enable the way that the consumer want to pay at the end of the day. So there's no specialization in terms of channels anymore. Of course, sometimes you develop one, but again, you need to provide solutions because otherwise they're going to start looking for different type of providers for that. But the pandemic was a catalyst. They were the players. They moved really fast on that. Sometimes enabling directly, sometimes working with their bank partner in order to do this move. But yeah, it was and came to stay. I mean, now things are getting into kind of a new normal. But again, in terms of payments, it started in a different way to have this kind of relationship, on no matter how we want to buy it, and enabling different type of payment experiences. Buying online, pick up in store, the curbside pickup. Again, there's an acceptance component, but there's also a software component on the back on how you control, because the consumer experience must be very simple.
Yeah. I think that's one of the reasons payment facilitation has been so successful and was so critical during the pandemic, because it is a software solution first. And so it's driven tech into payments, where historically, to stand up a e-commerce website for a merchant, they may have had to go and hire a developer, they may have had to go out, and there's no way during the pandemic they would have been able to get to market with a new solution to continue keeping their doors open. And so I think that's just been one of the biggest parts of it, is driving
more than
that,
3
that
days,
tech.
right?
Right, more than 3 days, right? You had a website up overnight, online checkout, and you were good to go. So
Yeah.
it's definitely been a huge innovation.
I couldn't agree more, right? And I mean, just this weekend, San Diego State, brand new football stadium, cashless, right? So you can't use cash. You know what they have there, though? Reverse ATMs. So if you have cash, you go to an ATM and you get a card coming back to you. I mean, you think about where the world has changed since I've been in this payments business. I mean, we're talking 55, 60% was card when I got into it in 2003. Now, I mean, I know you can't give stats, but it's much larger than that. And it went like this, and then pandemic hits and it goes like that, right? And no one thought we could get that extra 5%, and the pandemic across 18 months did that.
Yeah. And the consumers started to revisit also the way that they interact with payments, right? I mean, we started, in several markets, we started people buying grocery with WhatsApp. So tell me what you have. Oh, I have this. Okay, send me that. Okay, here's the link, you pay me. So it really shifted the way that you perceive payments. And I mean, we need all it's an important evolution for our ecosystem.
And so I hate to make you be the buzzkill, Ken. I can comment on this if I need to. There are some aspects of risk and compliance, though, that make sure, I want to make sure the audience understands, right? Yes, it is the holy grail, right? To get to kind of what I call pot at the end of, the pot of gold at the end of the rainbow from a partner journey perspective is that payment facilitator, right? But with that being said, why may payment facilitator not be right for a financial technology company today, but they can work for it tomorrow based on risk and compliance reasons?
Good question. Thanks for putting me on the spot with a hard one. Yeah, so I would say this, that in general, like I said, we're lining up better with what our compliance appetite is. And I think there was someone in the earlier session who mentioned, you know, how banks and technology and fintechs are starting to come together and look more at risk together the same way. There's structures that we have in the bank, like the for benefit of accounts we talked about, that we can put in place. When banks do that, we take all the risk, right? So we're going to be a little bit overly cautious on what we're doing there, especially as these are evolving marketplaces. And part of it is we want a good long-term solution in place. We don't want to set something up and then 2 months later something changes and we have to, exit a business or change the way you process, which would really disrupt your business in a major way. So for me, it's about having a good long-term strategy. We get legal opinions constantly. We just got one like a month ago. We continue to keep updated on what the regulators at our level are thinking the marketplace is going to look like and what we need to adhere to. So again, I don't think it's a buzzkill as much as it's just being smart and strategic with your time. Let's not implement something that we have to close later, and let's make sure we're doing it in a safe and secure way.
I'll add to Ken's point because we're seeing a lot of this. So at Phoenix, we kind of see 4 different models come across in the sales process, right? So it's either I'm on an ISO referral model today, I'm on a managed payment facilitator, I'm a PayFac, but I chose a build model, meaning I used an infrastructure partner like a Phoenix or somebody else to kind of use that or buy that infrastructure, or I did a build model. So sorry, the build one's the last one. And we went and built this whole infrastructure on our own, and we've spent 2 years doing this, and we thought we were ready to become a payment facilitator, and now some are coming back to say we were too soon, we were too premature, we hadn't proven ourselves in market, and so now we want to unwind some of the tech we built because we're focusing too much on supporting this infrastructure and not enough on building the products we need to increase our attachment rates on our solution more holistically. So I do think there was a bit of a buzz at first to like everybody's going to go run as fast as they can, and now banks are putting innovations around products so the build doesn't take as long, and people are adjusting a little bit so that that's not the scenario because it's a lot of time wasted. And let's be honest, the change in the market, there's not as much dry powder out there to just go build something for 2 years and then come back and hope it worked.
Yeah, I think that's it. We really vet our vendors we have a really long process. Everyone weighs in. We look at everything from the connections to their compliance teams to their audits. We do in-person audits. So once all that's in place, then we feel comfortable. Okay, we vetted this. We'll continue to vet it. This is a safe, secure way to do business. Yeah. And then it gets in place.
Yeah, and just to complement from a brand perspective, we also have been working very closely with our acquire partners to educate about the ecosystem, how to really choose the partners to mitigate the risks, controls, understand the rules, which is important, that we have, and also ISVs on making this move. Like I said, you need to take a look at that particular time in your business to see if it makes sense, but at least we want to make everyone to be aware of the things that they will be facing, because at the end of the day, we want what? We want new companies to thrive, because we're going to all be successful with that.
Yeah, agreed. And I think a good segue into a huge change happened from a Visa perspective with volume thresholds. Can you talk to us a little bit about that change in October of 21?
October, we did given the fact that, again, we listen a lot of our acquirers, our PayFacs, we did basically 3 main changes to our rules related to PayFacs. One is the threshold. We had acquirers saying, "Oh, it's so difficult to be in the middle of the agreement. It's a lot of operation." No, we already know our payment facilitators. We work very good together. We know that they have good policies in place. They control the risk. So one thing that we did is we used to have a volume threshold of $1 million, where after that threshold, the acquirer had to participate on the agreement between the PayFac submersion and the acquirer. So we excluded this limit if the PayFac and the acquirer already have more than 2 years of relationship. So this is a strong partnership. They know how to work with each other. So from a rule perspective, we don't have this threshold anymore. This is for the majority of the SMBs, and we were discussing about specific verticals. There are some specific verticals where the risk is different, the way to do business is different. We don't have this threshold at all. So verticals like tax, government, education, rent, utilities, probably I'm forgetting some, but there's a specific set of verticals that there's no need anymore to have this threshold. So this is rule number 1, the change number 1. Number 2, it relates to expanding acceptance. So as the PayFacs, they evolve, they started to serve a different type of clients. So we always had this concept of aggregation. That's why PayFacs cannot sponsor other PayFacs. But we allowed now PayFacs to work with marketplaces, with bill pay providers, and store value wallets to load funds. So this brings additional business lines for the PayFacs. And the third one, which is really interesting that we were discussing when you have operations across the globe, is the PayFac to work in a market had to have a shop in that particular market. So we lifted that jurisdiction rule. So if a PayFac, for example, from US want to work in Canada, they don't need to establish a legal entity anymore from a rules perspective. However, they need to connect with the local environment, have a local settlement account, follow up the pricing rules, regulations. But from a rule perspective, we're not requiring. This is important because we've been seeing a lot of PayFacs expanding their operations around the globe. Sometimes they want to test the market. So imagine the heavy lifting to, put the whole shop, and then, okay, it's not what we thought, or the value proposition, we found that there's a competitor. So this is an easy way for you to expand your business, and also for the acquirers that have operations in multiple markets, a very strong value proposition to follow your client.
For sure. No, I appreciate those comments. And I think one thing just to touch on for a second, though, is yes, you may not need to set up your own shop in one of these regions. Go try to get a bank account somewhere.
That's why it's difficult, depending on the market. Or you can work with a bank partner and they handle the funds on your behalf.
Yep.
But there's ways to do it. But again, if it's something that the market allows, we should be promoting this to happen.
Yeah. And apologize for that. But
that is good.
No, I mean,
a good push.
And at the end of the day, right? I mean,
and it's an opportunity, right? Like you said, for
is.
the bank. I mean, if the market's super regulated, there's no way to do it. So that's the partnership. So you can complement yourself. So one brings the stack solution, the technology, the way to go to market. The funds will be handled in a different way.
Sure.
But it's interesting.
No, it is interesting, and I think it's just important, right? Because as we expand our global reach, just as a bank, right? So as a bank, U.S. obviously U.S. bank, super regional bank, payments gets us to Canada. Payments gets us to do some business in Europe, right?
Exactly.
And although there still is that requirement of a bank account. So with that being said, Ken, I'll let you finish this out because I did give you the buzzkill. Well, now I'll give you the flex. Just on our API stacks, what's happening from our technology perspective, and why, from a partnership perspective, as one bank, we are the right folks to partner with in the market.
Yeah, boy, that's a loaded question, and our API team's here too. So I'll be quick with it. But I think that's it, right? We try to look at things as one bank, and we try to integrate all of our solutions across the board consistently. So when you implement something with, like our ELAVON platform, you can also leverage that for a U.S. bank platform. If you're working in Ireland, we have groups up there, we have multi-currency accounts, all those normal solutions that you'd expect a bank to have. And of course, a bank our size has a lot of those already built. So again, there's different ways to integrate, take in information, and really leverage what we have in place today. So. As you know, we work closely with the teams together, and we just continue to innovate and make our solution better.
I appreciate that, Ken. And at the end of the day, I mean, there's some articles that are now coming out on LinkedIn and other areas where there has to be an acquiring bank there. And every payments transaction, an acquiring bank needs to be sitting somewhere on the back side of that transaction. So with that, we are close to time. So we won't do questions here, but I believe all of us will be around. So Peter, we'll hand it back to you.
Thanks, guys. So big round of applause. So 5 minutes before lunch, so just quick announcements before I close out the day and just make some comments. So QR codes for lunch is on the table if you need it. Lunch is on you guys today. Be back here at 1 for the afternoon. Really want to close today. So I think themes, if you're besides build, connect, you guys should be doing this with me. Build, connect, innovate. Thank you. Thanks, Sarah. Besides building, connecting, and innovating, really what you saw, I mean, I think you heard Scott say like US Bank and ELAVON getting closer together. You hear PayFac and you're FBO. I've never been at a conference when the words came together. And so banking and payments, they're coming together. The things that they do at Visa, the rules that they talk about at Visa are being shifted to the banks as we move to models like Zelle, RTP, and FedNow. And so that convergence, Visa's looking at how they participate in FedNow, and we have conversations with our partners there, how they participate in RTP and Zelle. So it's getting blurry, and banks are becoming, more trying to support these models as our customers are. So it's really interesting. I've never heard panels, and just want to thank the first panel led by Ken. Thanks for, that was really great. And then Brian leading up with partnerships, world-class panel. I mean, come on. Kyriba, Microsoft, bottom line, really demonstrating how embedding payments is key to meeting our customers where they are in their digital journey, and closing it out. Thanks, Scott and panel. Great job, and off to lunch. Thank you.
Thank you.